Hello and welcome to Trade of the Week with me, Zinati Kuma, and joining me now for your weekly dose of technical analysis is founder of Herenya Capital, Petri Redelinghuys. And on his radar today are FirstRand, Sibanye Stillwater, Bidcorp and Growthpoint. Thank you so much for your time, Petri. Interesting that we're starting off with the banks. They've had a very, very interesting time over the last few years. And of course, with the interest rate hiking cycle that we had seen. And it's going to be quite interesting to see how they perform in this new cycle where interest rates are coming down. Talk to me about FirstRand, because that's also been an interesting one over the last few weeks. A lot of people have been asking on Stock Watch why the share has been under pressure, asking if it has anything to do with that UK probe. That they lost and now they are appealing.
Yeah, I think if that appeal, firstly, thank you for having me. Let's start there. Thank you for having me on the show. And yes, I think that's a potential, it's created a little bit of pressure on the stock. And I think that they've got a good chance in making some headway with that appeal. And if that does happen, then I think we'll see a re-rating or a catch-up trade somewhat quickly. From a technical perspective, it looks quite interesting that it's on a previous support level, that if you look further back in history was quite a significant level in terms of support and resistance. And it's kind of trading around that level at the moment. Now, we know that these levels aren't exactly 100%, specifically 77.48. It's kind of a zone, right?
Yeah.
Around that 77.50 area. It's spending a bit of time there again. So I think that from here it's probably, it provides a high probability setup, right? So here we have a situation where we can take a long trade from this support level with a relatively tight stop loss and a potentially big take profit. So you can get like a 1-to-4 risk-reward ratio long trade out the stock here, which is quite attractive to us.
Okay.
I want to just preface also,
yes,
before we go any further, we're going to be looking at some charts today.
Yes.
The US election is happening as we speak.
Yes.
Right? So everything we do today by tomorrow morning could mean nothing. Okay. So that I think is
a disclaimer,
just a disclaimer to put it out there.
Yes.
That sometimes the fundamentals trump. Drum roll.
Yes.
The fundamentals trump the technicals, right?
Yeah.
And if we see a surprise outcome or some unexpected event, the market will react very positively or negatively accordingly, right? Obviously, it'll take a couple of days. Relatively much faster than here, but it'll take us some time for us to see the result of the election outcome, but we'll be able to keep tabs on it as it goes. So I think that there's a lot of unknowns out there at the moment, and that I think is going to be, that sentiment is probably going to overrule whatever we do today.
Yes, so at this point you can really trade on what you know. Yeah,
so I think we kind of just stick to what's been working thus far.
Okay.
So we're taking relatively easy punts today, if you will, not overly complicated trades. First round of support, if you have a look at the chart, we've got a relatively strong support level here that was resistance sort of back in June and July. It had been support for a number of months after that, acted as support again in October. Now, recently with a bit of the bad news and stuff happening, it's managed to punch through a little bit, but still hovering around the support level. So from here, we think that it's probably a relatively safe bet to trade it higher. What I'm going to do is I'm going to compare this to the likes of Standard Bank. So if we add Standard Bank to that, for example, and we add Nedbank, we can see here that the other two banks have significantly outperformed, and even in recent times where FirstRand has really come down quite hard, the other banks have not. So yes, that is due to the sort of news catalyst, if you will.
Yes.
But from our perspective, this creates a nice opportunity. You could probably do a pair trade if that's your kind of thing, which is market neutral, even lower risk. You'd go short one of the stronger banks, long the weaker one. So you probably go short something like Nedbank or Standard Bank, and then long FirstRand in equal and opposite exposures. So then you're basically trading on that ratio between the two returning to normal. Or you could just essentially go along this FirstRand position off the support here, and essentially you're looking for that little catch-up trade. So I think that's a relatively safe bet given the fact that there's a lot of unknowns out there at the moment.
It's quite interesting because I don't think that share price, as much as we've seen a little bit of pressure, I don't think it's a lot, considering also that they've even put aside a provision of 3 billion for this case. Yeah, do you think that this is as much bad news as the market can put into the stock, or maybe if they don't win the appeal, then they could face a little bit more pressure?
I don't know. It's hard to tell. It's good that they've provisioned for it, so
Yeah.
that kind of I think is reflected
So at
in
least
the
that's already
adjustments we've seen in the share price already. So
Yeah.
I think from here it's probably
Yeah.
the risk is to the upside. If I
Yeah.
could put it that way.
All right. Well, talking about risk, let's go into Sibanye Stillwater. I got dizzy looking at that chart. I was looking at it from a yearly point of view.
Yeah,
3
it's-
months, it is so volatile. I mean, it was nice to see that it was up 5% today, but I guess, yeah, you can't really tell.
So we had some numbers come out today. So there's a couple of things. There's a potential impact on PGM production and all that, in the future. But in general, the market looks at the production number report or the production numbers and said, well, we like you, right?
Yeah.
So yeah, up 5% today. I think it's a relatively, again, we're not taking wildly crazy bets here today. So I think that this is a nice one where it's got very strong sentiment. Irrespective of what the outcome of the election is, and I think I've said this a few times, so I'll say it again. I think the Trump probably takes it, and I think that the market rallies really hard after that. But probabilistically speaking, we probably see the market soften over the next day or two while we're uncertain of what the outcome is. That could be positive for gold. Gold, as we know, is trading sort of at the highs.
Yes.
Palladium is triggering alerts, well, at least it's breaking resistance levels as well. So it seems as though the basket of PGMs, the platinum group metals, gold, palladium, platinum, and so on, rhodium, are doing relatively well. And this bodes well for Sibanye. Plus, on the back of a strong production report that the market quite enjoyed, I think we've got a nice little setup to continue to follow the trend here. So if you look at this chart that I have up here, for example, we have a number of different things. So firstly, this is essentially a downtrend that has been broken, and we can connect it like that if you want. So that downtrend has been broken by the formation of higher highs and higher lows. So I think this is something that we've spoken about in the past as well, but just for sake of illustration, there we have essentially a high and another high, and those are lows and a higher low.
Okay.
So what we have here is from that move to that move, we have higher lows. We now have a third consecutive higher low, right? And we probably go on to make a new high here. So this is a trend sort of reversal, Dow theory, trading 101, trend following strategies. It's a good place to get in. This is also a very strong bullish engulfing candle. It engulfs 2 days, 3 days worth of price action at this stage. So this is a very strong buy signal if you ask us. We can also then add different layers of other indicators as well. If we look at a stochastic, for example, momentum is still quite strongly towards the upside. So I think that we have a very nice trend following entry here. You can be conservative and place your order sometime tomorrow at maybe 21 or 21.10 or whatever, or you can just buy it now this afternoon. And you're essentially looking for sort of 25 to 26 Rand potentially as a target price. You've got a resistance level all the way up here. So that could potentially be a target price with a stop loss sort of below 19 Rand 60. So it's a relatively good trade if you ask me from a trend following perspective.
Is this the stock really having had enough of the perfect storm that we have seen even operationally with Sibanye, and also even the recent court case with was it the mines in Brazil, Chile?
Yeah. So look, I mean, I think there's always there's a lot of headwinds, a lot of challenging things, or whatever the case. At the end of the day, the market is a sentiment machine, right? In the short term, it's a sort of a random number generator. In the long term, it's a weighing machine, right? So I think that, sentiment here for the stock, at least from what I'm reading and seeing, is slowly starting to turn. So yes, there are still some headwinds, but at the end of the day, it has good quality assets. It produces an enormous amount of precious metals, and those prices of those precious metals are going up. So it's a good position for Sibanye to be in, I think.
All right. Talking about a good position, a company that has been in a good position for a while is Bidcorp. I'm actually interested to see that chart, because that seems to have momentum that has nothing to stop it.
Look, so last time we spoke about Bidcorp was around here, if you look at a little circle on the chart. So in this space is the last time we spoke about Bidcorp. And the time, or the idea then was buy it off the support level and kind of, get rid of it closer to the upper end of the range. well, if it ain't broke, don't fix it, right? So we're going to do it again. So essentially, every time it gets close to this 413 Rand level, it finds a bit of support. Yes, from time to time it punches through. But so far, every time we've seen it come in here into this sort of space here, it's bounced off quite nicely. So if, we are pattern recognizers, it's what our brains do best, recognize patterns. So we see a pattern, let's try and buy some here and sell it again at sort of 450, 460 maybe if we're lucky.
Yeah. So is this a good one where, anytime you see any kind of dip, you go in?
Well, yes and no, right? Ultimately, you want to be buying off of a validated support level.
Okay.
So it's not just, the stock's down 5% today. Let's do this, right? So if it starts sort of dipping around here, and you see, okay, it's now broken the recent lows, that might not necessarily be the right time to buy it, right? As time goes by and it gets closer to this level, that could potentially be a better chance to buy it. So what you want to try and do is, yes, buy into weakness, but also buy at times where the probability of success is at least in your favor.
Okay.
So for example, here, if you buy now at 421 and it trades to 412, you get out, you lose a bit of money, it's fine. But your potential upside here is to 450. So you've got a decent risk reward. I'll use this little tool. So you've got a decent risk reward, right? So you could basically take that trade over there. Let's say you go to 450 to be conservative, right? There you go. So you've got sort of 6.8% worth of upside with 2.2% worth of downside. So you've got a risk-reward ratio of 1 to 3. And that's great, right? So that's the kind of trade that you want to take, where you know that it's fine if I get it wrong, I lose 1 Rand. If I get it right, I make 3.
Okay.
So this is essentially, you get trades like this and you accumulate them over time, and that's how you create consistent results. So for us, this is a great opportunity to buy as close to this sort of 413 level as possible, and to try and get out around 450. And
if it goes below that?
If it goes below that, then you stop out and you wait for another opportunity. Do you know what I mean? I think the hardest thing for us to do, and I see this time and again, the hardest thing for us to do is to recognize that we're wrong. Right? Eating hat is not easy.
No.
So that's something that we have to be mindful of when we are participating in markets and trading and that kind of stuff. Is if this thing breaks the support level, the trade's off.
Yeah.
Now you're going to nurse it and hold your loss for 5 weeks, and maybe it comes back, maybe it doesn't. Who cares? There's another opportunity, right?
Okay.
If it does break here, then maybe try and buy it closer to 395, because we've seen that was quite a strong support level as well in the past. So if the first level breaks, get out of the trade. Don't wait for it and add more here.
Yeah.
Rather, you could maybe try short it all the way down to that and then try and go along from that level again, So any number of opportunities you might miss out on because your capital is tied up in a bad trade.
Yes.
So if it goes below 430 or 412, get out, right? But if it gets from bounces all the way from 450, you've made a bit of money.
All right. Well, let's go into Growthpoint. And we know the REIT sector has been one with a lot of inflows lately, of course, because of the turning tide in the interest rate cycle. But yeah, looking at the property sectors, they actually haven't been coming out with bad numbers. Yeah,
so let me just remove all of these. So essentially what's happening here is, at least in my perspective, we have a bit of a flag formation happening. So this is not going to be perfectly beautiful, but it's going to be close enough. So we've got a bit of a flag formation situation happening here. Now, I think the last time we spoke about this also was around the interest rate cut, and we spoke a lot about, if I actually put our annotations back, we spoke a lot about what the interest rate could potentially, interest rate cut could potentially do to the stock, right? So from what, from our perspective, is that has now essentially started playing out, and we're starting to see this re-rating of the property stocks as lowering interest rates have started to boost returns in the property space. So I think that we've had a little bit of a pullback now. Well, very clearly, the market shows us has had a bit of a pullback. We've pulled back from around 14.50 to around 13 Rand a share. This, we think, is potentially a nice little bull flag setup. So if it breaks above this sort of level that we have over here, it's a bit of a moving target. You could probably buy it here and then trade for the for this little ABC pattern, right? So you would have that. Squish it a little bit. So you'd have that sort of setup, right? It's not exactly perfectly drawn, so forgive me, I am not Picasso. But we have a nice little sort of ABC setup here. So that would be 0, A, B, and then C, your target around 15. So that seems like a relatively safe trade setup for us as well.
Yeah.
And if we can even see that we've got a bit of a, our momentum indicator has been at the bottom, plodding along here for a long time. What's really going to confirm this trade is if you see this type of move. I'll circle it. If you see that type of move on your stochastic oscillator, so this is just for those who are interested, a standard 1433 stochastic. So once we see this move up through 50 and then up through 80 as well, then we've got confirmation that we want to be long, right? So now I know that everyone who's done a technical analysis course is saying, that's not the right way to use a stochastic. I promise you, that's the right way to use a stochastic. You want to have it come from below 80 through 20 through 50 through 80 again. So from below 20 up through all three levels, then you've got a confirmed buy signal, and the other way around on the way down. So from above 80, down through 80, down through 50, down through 20, and you finally got your confirmation that you can go short. So yes, it's a bit slower, yes, it gives fewer trades, but it does give bigger moves and more reliable signals. So once we see the stochastic basically break up through 50 and 80 over here, I'll mark those two levels for you.
Yeah.
So we've got to break up through there, and we've got to break up through there. Then we have a situation where we absolutely know we are happy to be long growth point. So yes, we might not necessarily get the absolute turning point, but that's fine. You're never going to get the turning point. We just want 60% of the move, and we're happy to make some money.
Because I was about to ask, what if it doesn't go through the C line and it actually breaks below that line?
Then no signal. Yeah. So if the stochastic is this little indicator, I'll make it a bit bigger for the sake of ease. So if the stochastic oscillator sort of gets through here, fails to make it through 80 and comes back down, then no signal. Then you can't take the long trade. You want it to have this situation where it breaks through both those, the bottom, middle, and top band. So it's broken the bottom, we need the middle and the top one to break. Then you've got a confirmed buy signal, and you can go long.
Okay. Well, thank you so much for your time, and hopefully none of these trades will be null and void.
Let's hope so. We'll see
tomorrow.
Yeah.
Thank you so much for your time and for your technical analysis today, Petri. That was Herenya Capital's Petri Redelinghuys. And that's a wrap for today's edition of Trade of the Week. You can catch us again next week. But for now, be sure to stay tuned to Business Day TV for lots more coming up.